Right, learners, today's lesson I want to look at the debtor's age analysis. Now, one of the biggest problems with this is that people don't seem to understand what is meant by an age analysis. So if we break down the words, your debtors, first of all, are the people that owe you money. The age, we want to know how long these people are taking to pay us. What is the age that the debt is outstanding? Now, most businesses give their debtors 30 days. And so in view of that 30 days, we want to see if they are settling that account within their 30 days. But now, what is actually meant by 30 days? Let's just have a look at this. If I take, for example, today is July. All right. So throughout the period of July, from the 1st to the 31st of July, I buy goods throughout the month. Come the end of July, the business will prepare a statement. Now, a statement is a summary of all these invoices, all these amounts that I've been buying on credit, and they then send me a statement with telling me what I owe in total for all of this. Now, that normally gets sent out towards the end of July. You are then given 30 days from the day that the statement is issued. So in actual fact then, that means that you have August to pay your goods. So whatever you buy here in July, you have got until the end of August to pay. And that 1 month later is 30 days. Now we need to understand that. July is the current month. We refer to this as the current month, the month in which we actually are buying the goods. But you only pay 30 days later. You only pay in the month of August. Now, 30 days does not mean that we count exactly 30 days. And like, for example, July had 31. 30 days means 1 month later. So now if you've got that understanding, we can look further now. Look at this age analysis. The important thing, look at the date. This is the date on which we're writing this out. We've got our list of our debtors, the people who owe us money. The credit limit. This is the amount that they are allowed to buy on account. So that's what they're allowed to buy. Now, that goes on your screening. The business will have screened the debtor when he applied for the account based on his credit rating, based on what he earns. You are given a limit. That means you should not, and you should not be able to pay or buy for more than that. The amount owing is the balance at this stage on your account, how much you actually do owe. So this is your actual, and the credited limit is what is permitted, the total amount that you are allowed to buy on credit. Now, because it's an age analysis, we're breaking up this total amount and we're saying, well, when did you actually buy these goods? So a current month is this month. And if we're doing this for October, the current month will be October. That's what you bought this month. 30 days is what you bought a month ago. So that's what you bought in September, that's what you bought in August, and that's what you bought in July. Right? Remember from that previous slide that I showed that the 30 days is always a month before. So whatever you buy in October, you would still be allowed to pay a month later. Now, what does that mean? It means that if the terms are 30 days in this business, up to 30 days is within the terms. People are meeting their terms. So these two columns here, the 36% and the 24%, in other words, 60% of the amount outstanding on our debtors is within the credit terms. The problem is these 40% over here. These 40% of people that are over the 30 days. So now let's take a look at each one of these debtors. If we look at Zulu, Zulu is a perfect debtor. Here's a balance. His amount owing is 5,000. That is less than the limit. So there's no problem. His amount outstanding is in the 30 days. So no problem at all. If we look at Piepwater, the problem here is that he's got a credit limit of 3,500. He should only be buying up to that amount, but he's got a balance of 4,200. Yes, those two amounts are within the credit period, so there's not a problem there. The problem is with this. Now, that would not be his fault, it's the business's fault. The business should not have allowed him to buy beyond this. If we look at Valley, Valley is below his credit limit. In fact, his account is very low compared to his limit, so that's actually not a problem. But he's got 950 Rand in 90 days. He's outstanding. Now, the big problem that exists with M Valley, though, is that despite this amount being outstanding, the business has gone and sold goods to Valley this month. So there's a current amount they've sold to him during the month of October, and yet his account is outstanding. Now, that is a problem, and the business is at fault there because they should have stopped the account until such time as this amount had been settled. Now, if we look at Walker, right, again, his credit limit's 13,000 and he only owes 12,500. So fine, there's no problem there. These two amounts are within the credit terms. But can you see how, in the case of Walker, he's actually got two amounts, 8,500 outstanding for 30 days and for 60 and 90 days. And on top of that, they have continued to sell to him despite the account being overdue. And again, if we look at Clade, he's used up his whole limit, which is fine. I mean, he's allowed to do that. But this amount has gone into 60 days, and yet we've sold to him during this month. So if we have to look at this and say, well, where are the problems? The problems are, first of all, that in the case of Botha, he's been allowed to buy over his credit limit. That's a problem. In the case of Valley, Walker, and Klein, their accounts are overdue. So that's a second problem. And then a third problem is that in the case of these three debtors here, despite their accounts being overdue, they have sold to them. And the accounts should have been blocked as soon as the account became overdue, and that he should not be allowed to actually buy again until such time as the account is settled. So there are three problems here. The question only asks for two different. Obviously, you can use any one of those problems. Just to finish up then, explain why the debtor's age analysis is considered to be an effective internal control. Please don't use the word it is an internal control. That's been said to you. We know that. But what does it mean by an effective control? And it only asks for one point, but the point is that you are actually going to be able to monitor which debtors are outstanding, which ones are taking too long to pay, which ones are going over the actual limits. So you've got a control over these people to see who is overdue, and so therefore you can stop their accounts, block them at that particular point in time, and stop selling to them until such time as they pay their accounts. Now, debtors and age analysis is a very common exam type of question, and it's very important from an internal control point of view. But it's no use just looking at it like this, learners. You need to be able to interpret this information. So take time and go through these figures and see that you can understand and read it all.